Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 15th of July, 2023, and it's the weekly technical analysis for the Euro, cable, and the Aussie dollar for the third week of July. And across these three majors, you can see a strong rally for all of them, and only the Aussie dollar has pulled back on the Friday. But these were basically fueled by lower than expected CPI figure from the US that came out on Wednesday, that came out lower than expected, and followed by Thursday's PPI data as well, which was also lower than expected. So giving some hope for the market that the Fed may pause or slow down in their rate hikes, especially this the following week, where they have their next meeting and where they were likely to raise interest rates by another 25 basis points. So the market went into a risk-on mode along with the stock market as well. So we'll see if this rally can continue this coming week. And let's check what the major news were that fueled this last week, basically the CPI and the PPI. And look forward to this week's news for these three regions as well. So last week, the major drivers were US CPI and PPI data. So Wednesday, the figure came in slightly lower than expected. And after several declining months now, so this is moving in a positive trend for the economy and for the Fed that's watching to as influence on their decision. And PPI as well was also lower than expected. And on the economy, the consumer sentiment was soaring on Friday as the figure came in higher, way higher than expected, and after quite a number of years now. Prior to that, the UK side, jobs was claims was unfortunately higher than expected, and GDP did come in slightly better expected as well. So we'll see whether that continues into next week, because there's the UK CPI data coming up that would influence the Bank of England in their decision in their meeting couple weeks time. All right, so this coming week, the RBA is first off with their monetary policy meeting minutes, and where they did pause after a surprise hike the previous month. And we'll see what their expectation is for the next 6 months. For the US side, the retail sales figures are coming out and expected to be strong compared to the previous months. So after looking at the strength of the economy, so forecast is going to be fairly high. UK CPI forecast is still fairly high, above 8%, where over the past couple of months it has been stuck at the 8.7 range. So it's still running pretty high, and we'll see whether it's able to dip down a bit lower. Followed by Australian jobs report, where they're maintaining a fairly conservative forecast after a surprise the previous month. Surprisingly strong jobs added for the previous month. All right, so let's see how this coming week will shape up as the market prepares for all the central bank meetings the following week with ECB and RBA, and as well as the FOMC, of course. Let's move back to the analysis. Let's start with the euro, where it's made a significant rally and a bullish move, a breakout above the 110. The resistance zone. And after the previous week where it's been finding support and consolidating in this descending wedge, finally broke out and managed to clear not just 110 but also rallied towards the 113 figure, but stalled just above 112. And if we just move back, this resistance zone is also cracked through that. We go back, it was from the February of last year, and also breaking out through the weekly 200 EMA, where it was stuck for a while. Managed to break through that, and after breaking through 110, then we managed to break through that next barrier. So the fib extension at 138 is at 112.66 area, and getting close to 113. So actually we could also move this reversal to this continuation move of the low of March to the swing high of June, the previous month. And you can see that they did hit the 162 fib extension. It exactly paused as a doji on the Friday. So the strong moves were on the Wednesday and Thursday with the US CPI and PPI data. That triggered the rally and the breakout. And if we look at extension on the 200 fib, it's at getting close to 114 area. Let's mark that one in as well. So let's see this week how it pulls back and perhaps into this previous resistance zone and the 138 fib before continuing its bullish trend. So this zone is going to be an interim support now. And this area as well is also interim support. We have the major support at the swing high, just above the 110. We can move this is out of the way now. And perhaps target the 113 and as well as the major resistance target now at just near the 114. And intermediate resistance at the 113. Okay. So check back on the weekly time frame as a strong bullish move after more or less a triple bottom. The last one as a hammer. So that was already positioning itself for breakout. Let's see how far this rally can move to. $115 is the major round figure right above that. Okay, so no major news from the Eurozone, but just exposed to the US retail sales on Tuesday. So let's see how much that could impact the euro this coming week. Let's compare this with the US dollar index, which should be inversely correlated. And here's the US dollar index, the DXY, and you can see that it has been red and very bearish for the whole of last week and even before that, where it previous Friday it did break below this trend line of the lower trend line of the symmetrical triangle. And after that, the horizontal trend line on the ascending triangle, and then continue down to break below this previous swing low, probably the low intra-year low, and now has formed a new low for the year, broke below the 100 and heading towards 99 round figure. It could be a pause with some pullback, but we'll see how much it can pull back. Maybe could retest the break of the swing low as a critical break. And if it's not able to recover back up, then it's going to continue lower. Okay, and we could also update this fib now to probably show the bearish continuation move to the swing low of last month that broke below the 162, trying to get to the 200 fib at the 98.68 level. Okay, so let's mark this 200 fib here as a major support. And probably perhaps below that, the 98 round figure will be a next major support. $100 will be a key round figure resistance now. And the next major resistance at this 138 fib, which should closely align to the previous intra-year low. And probably let's extend this swing low out here. $136. So that will be the major resistance. All right. So let's see if it's able to resume its bearish trend this coming week before the FOMC meeting. And on the weekly time frame, it has found support at the weekly 200 EMA, so that could be pulled back into the previous swing low. It's at the 138 fib extension. So let's see how much pullback there is. All right, there may or may not be much impact from the retail sales figure. So we'll see whether it's just a technical rebound and a retracement. But on a weekly time frame, it's definitely a very bearish move last week. So let's see how much support it can garner. Okay. Let's move back to the other major pairs. Moving on to the cable. And it's been on a very bullish move after finding support just around the 126 zone, and has been climbing up the whole of last week, pushing through 131, breaking through the key 130 round figure. So that's going to be the support now. And perhaps we can also update this fib to the swing low and high of last month. And it has just hit the 162 fib extension, and then a pause on the Friday to dip just below the 131. So let's mark this as a major support at the swing high of last month. And 30 at the interim support. . And major resistance at the 200 pip at 133.28. So we already have 162 pip as a intermediate resistance. Okay. On the weekly time frame, has a strong bullish move breaking through the 200 EMA, weekly time frame after closing above that last week. So there could be further bullish continuation move for the next couple of weeks before the Bank of England's meeting. And this week there's some UK CPI data, which has been running quite high for a number of months now. All right, so let's move on to the Aussie dollar. And likewise, it also push up on the Wednesday and Thursday after consolidating and after basically finding a double bottom. Support from the 66 round figure and climbing all the way to just below the 69 round figure to test the year's high. So you probably need to just flip this flip around to in case it extends further higher. So that's from the swing low and swing high of the year. On the weekly time frame, it's the bullish breakout to almost test the year's high. Sorry, it's not the year's high, but the recent high. So this area is going to be significant resistance is still going to be at the 70. There will be intermediate resistance at the 69. And support is going to be at the 62 fib here, just below the daily 200 EMA, and intermediate support at the 68 round figure and the 786. All right, this week there's also the RBA's meeting minutes and also some jobs data. Okay. So let's see how much pullback there's going to be before it attempts to test the 69, and if it's able to break out higher and attempt to target the key round figure at the 70. Okay, let's do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.